B-roll. It's that time of year again, bombarded with messages about the pending market crash. The stock market crash 2021 is coming. Well, every year.
And that pisses me off.
That being said, every year I get worried, and every year I just want to survive that stock market crash, and my stomach churns and all of that jazz. And as a family, we have significant exposure to the stock market, and many of us have way more than we think. And with that, there is that innate fear that this time a market crash could be different. And the pandemic has taught me well that yes, it will be different, it always is, but we are resilient humans and our economies are adaptive and we will get through it. We will survive that market crash, and even if we can't predict the future, so how will we survive a market crash when it comes? Question. Well, first things first, if we believe a market crash is coming, we should ignore that feeling because we are probably wrong. I mean, are you Mystic Meg? Do you have a crystal ball? Because if you do, tell me where you live and I'll come over. Trying to time the market is the easiest way to lose money in the market. Being able to time the market requires 2 superpowers. Cue this guy. First of all, when to pull your money out of the market. And second of all, when to put your money back in the market. And nobody, let me tell you that, can do both of those. The reality is, if we try to time a market crash, we will screw up. I know I definitely would, just because of the pressure. The best investors of them are all regularly culled for thinking that they can. And if they can blow up, I mean, you just have to look at the news. We are just mere mortals, retail folk, muggles, whatever you like to call yourself. We all know trying to time a market crash is a bad idea, but everyone wants to find out for themselves and give it a go. I don't know what it is exactly, probably a combination of nerves, greed, and even fear.
Alrighty then.
So here are the reasons we shouldn't really care if the stock market crashes in 2021 or 2022 or the year after or whatever or whenever you're watching this, because there are 2 underpinning principles which I follow which will provide your rational mind with some peace. First of all, buy the whole market and know the market will always bounce back. What the hell's wrong with me? And second of all, become an emotionless investing robot.
Oh, she's taking it.
Personally, I feel that a market crash could never hurt me. I am protected, guys. I've got my armor on. And this is because my portfolio is not linked to my financial security. We have an emergency budget and we budget to invest as much of our excess income as possible. So while a market crash will hurt, the only thing that could hurt me is a loss of income, but that's okay too, as we have built multiple sources of income. So there's my job, his job, our business incomes, and our rental income.
Okay, and what do you want me to do about that?
Now, pre-pandemic, all of these incomes were working a dream. Now, with our business and rentals highly tied to property rentals, and those have taken a huge hit in London, we are a little bit down too. We've had to reduce the rent to stay competitive, and we've had a greater period of time where units have remained empty. But that is okay because we have jobs and they are more than adequate to cover our expenses. So diversify those income streams and live within your means. And then you won't have to care about what happens to your investment portfolio through a market crash. In fact, bring it on, step outside and bring it on. But then what good is your investment portfolio when you can't rely on it when times are tough? And that's a good question. And you're right if you're thinking that. It's there for a purpose. And if you're feeling that your job security is not quite where you want it to be, do what professional money managers do and take risk out of your investment portfolio. By taking risk off the table, you're less correlated to the market moves because you move your money from risk on assets like equities to risk off assets like government bonds or even cash. Ooh. This is not market timing. This is a smart personal risk management technique. And remember, as I say often, manage your personal finances like a business.
A special idea. Another situation.
Right, the second thing I want to talk about is the market always bounces back. And yes, they always do. So let's sprinkle the facts on this one. There is a research paper published by the National Bureau of Economics titled Negative Bubbles and What Happens After a Crash. So in the paper, 1,000 crashes between 1692 and 2015 were studied. And some interesting trends did emerge, which you probably knew about anyway or felt you noticed anyway. So the definition of a crash in this particular paper was a 50% decline in 1 year, and more than 1,000 crashes were observed in the time period. And that's a lot, guys. But that's the thing, a crash is more common than you think. And there are two patterns that actually emerge here. First of all, stock prices tend to increase dramatically after a crash. And second, investors reduce their allocation to stocks and missed out on returns. So in simple terms, during the market crash of 2020 with the pandemic, a lot of investors sold out the market at the beginning of the pandemic and then missed out on the greatest recoveries and runs the stock market has ever had. So just remember this, if you invest in tracker funds, the markets will bounce back. And don't worry, I'm in the same boat, biting my nails here.
Well, maybe he was nervous.
But it will come back. But if you're invested in single stocks, then yes, you are exposed and don't have the same guarantee of a bounce back. So keep that in mind. And when stock picking, if you lose stock through a crash, will you be okay with the loss? If not, then don't try and do it. And I know that is like really hard and all of that jazz, but you just have to just hang in there. Now, bringing all of this together, invest like a robot. So far I have said it doesn't matter, and I couldn't give two hoots if the market crashes, and that's because I don't need the money right now. We have multiple sources of income, and for the bulk of my investing I track the market. However, we can still screw up, guys, and that is by freaking out.
Wow, no. The kind of girl you read about.
Selling all your investments at the worst time in the midst of a crash. Now, I have to remind myself that I'm not immune to this either. Last year was the first time I really had to put myself to the test, and I reacted okay to it, but I could have been better. I could have invested even more than I did. During a crash, the rational thing to do is increase investing, not reduce it. So remember that. Next time you panic, don't panic sell, but panic buy. In fact, relax when everyone is panicking. Just relax and pick up that cocktail or that juice or that cup of tea, whatever you fancy. Now, I also did a video on some tips for handling yourself through a recession, no matter how safe a job may feel like or how good you are. Complacency can be a real killer, guys, especially when the economy is in the midst of a recession. Remember, while it may feel like the market and economy are the same thing, they're not. So click here for my thoughts on how to approach a recession, and I'll see you over there.